The other thought is people often are fixated just on the price and or monthly payment. And so, selling land on terms, you can get really substantial interest rates most of the time if you're giving them what they want, price or terms wise. So, an 8 to 12% interest rate is very typical.
So Dan, what is the number one secret to structuring seller financing deals?
The number one secret. If we're talking about you selling on seller financing, we can hit that first just to be clear. I would say one of the biggest things is to make sure that you're doing your due diligence on the person to make sure they are going to be able to pay and or getting a large enough down payment that it doesn't really matter. And so let me give you an example. I bought one a couple years ago, just a piece of land. It was a multifamily lot at $13,500, sold it at 38, and she put 15,000 down. So my money was completely out just after the initial down payment, and then I've been getting $500 a month on that since. And so in that case, I didn't screen her really hard because the down payment was more than what I even had into it. In other cases, when I've sold land with lower down payments, which is often a great strategy if you're struggling just to get it moved, I'll go on a land contract or contract for deed where it stays in my name, in the company's name until they pay it off. So it's much easier to take back if there's any sort of problem. So those are probably the main thing that comes to mind.
Excellent. So it sounds like if you are the seller and you are selling, you're going to be financing the buyer. The number one secret to structuring these types of seller financing deals is to make sure that you're doing due diligence on the person and make sure they can pay as much as you can. Like, you're being thoughtful about that. But even more so, or coupled with that, just make sure it's a large enough down payment where essentially you're getting all or most of your money that you put into the deal anyways, if they don't pay, because you're just going to foreclose on them. Is that a fair summary, Dan?
Yeah, exactly.
What would be the second secret to structuring seller financing deals? It could be from the buyer's perspective, or it could be just in general for approaching people to make deals.
Yeah, the other thought is people often are fixated just on the price and or monthly payment. And so, selling land on terms, you can get really substantial interest rates most of the time if you're giving them what they want, price or terms wise. So, an 8 to 12% interest rate is very typical.
Interesting. So so if I'm hearing you're saying either someone's typically focused on the price, which perhaps means you can negotiate a little bit lower interest rate because they got their higher price, or they're really focused on the cash flow. In that scenario, maybe it's a lower price and a much higher interest rate. Is that what you're referring to, Dan?
Well, I was saying, again, more from the perspective of you're selling the land. A good negotiating tool is they get fixated on they only want to pay X price or they only want to pay X amount every month. And so you can charge a really substantial interest rate. But your point is also true on the flip side, where if you're trying to buy on terms, people still get fixated on a number, whether it's a lot of times it's the price. And so they'll give you low interest rates if you give them their price. And so I can give you an example of that if you'd like.
Yeah, please. That'd be great.
Got a rental on seller financing a couple years ago where he had $250 just stuck in his head as the price he wanted. Couldn't get him down on that, but got 3% interest only for 2 years, at which point it transitions to a permanent mortgage at 3%. So especially now, that's quite an asset, having 3% debt on just a solid rental here in town when interest rates are 7-8%.
Wow. Okay. Make sure I got that. So you said, fine, we'll give you the 250, although perhaps you don't think it's worth it. You guys aren't coming to a great compromise. But the compromise was he would, or you would, I'm quite sure, 3% IO for 2 years.
Yep.
And then it was fixed for what? For how many years?
And then it's a 15-year straight line amortization loan, just a normal mortgage, 3%.
At 3%. Yeah. Then then it's just fully AM, but for 15-year AM. At 3%. So it went from IO just to full AM at 15.
Yep.
Yeah, that's a great point, especially if interest rates are where they're at now.
Yeah.
So how do you, and so I'm sorry, were you the buyer on that?
Yes, that's one I bought. That's a rental property.